Hi, my name is Mark Walhout, and in this video, I want to talk about one of the most important financial decisions that you're ever going to make, especially as it relates to your investments. And that's the decision that you make around how you're going to allocate the assets inside of your portfolio. So I'm going to explain what asset allocation is and what are the three factors that you need to consider when you're trying to determine what your real asset allocation should look like for your portfolios. So we're going through a period right now of volatile markets since sort of the beginning of this year. And when things are going well, asset allocation seems like an easy decision. It's let's purchase the thing that seems to be doing well now and hope that the good times continue to roll forward into the future. And unfortunately, it's times like we've been having over the past couple months that people start to question their investment decisions, especially if they haven't kind of thought out in advance, how they should allocate their investments. That's a good match for their plan and for their personality. And so the act of asset allocation is really trying to figure out that mix of assets. And the main asset classes that I deal with are stocks and bonds and safe instruments like cash and GICs. Trying to figure out what the right blend of those investments are to match the person, the individual investor, as well as their financial plan. And when considering the asset allocation that makes the most sense for you, there's really three things that you need to consider. And these aren't my ideas. They came from a book. It's a fantastic book, and I'm going to link to it in my blog post and in the show notes. And the book is called Your Complete Guide to a Successful and Secure Retirement. It's written by Larry Swedroe and Kevin Grogan. And he goes through a whole bunch of different topics around investing and retirement. And he says there's really three tests that you need to sort of pass when you're trying to consider what your asset allocation is going to be, your asset mix in your portfolio is going to be. The first is, what's your ability to take risk? So how much risk can you take personally based on your situation, based on your financial plan? And there's really four metrics that Larry talks about in his book that helps you determine your ability to take investment risk. The first is your time horizon. How much time do you have between now and when you need to take the money out of your investment portfolio? The more time you have, the more risk you can afford to take. The less time you have, the less risk you can afford to take. The second thing that Larry talks about in the ability category is stability of income. So if you're a commissioned salesperson, you have a very variable income, that sort of lends towards maybe a bit more of a conservative investment posture, because you may need to take money out of your investments to live your life if you go through a period where you're not earning as much money. If on the other hand, you have a job for a very big organization, you've been there for many years, or you work for the government, you might not have a lot of variability in your income, so therefore you can afford to take a bit more risk with your investment portfolio. The third item under ability is your need for liquidity. So do you need to turn your investments into cash in the short run? That kind of also goes along with time horizon. But if you need to turn those assets in your investment portfolio into cash in the short run, that sort of pulls back on your ability to take risk. And then the fourth one is options for plan B. So let's say that you have a variable income, you have the need for liquidity, but if things got bad, if push came to shove, you'd have other options to go to make sure you can continue to live your life. If you know for sure, even in really bad times, you wouldn't have to access the portfolio, that means you have a very solid plan B, and therefore you can probably take more risk with your investments. So that's the first category, is ability to take risk. The second one is your willingness to take risk. And in the book, Larry talks about, it's called the stomach acid test. How much would your investments need to go down before you would have this awful chemical feeling in your stomach, like, I got to get out, I can't take it anymore? And stocks over short periods of time, like we saw at the beginning of 2020, a global basket of stocks went down by about a third in the beginning half of 2020. In 2008, in the great financial crisis, US stocks during that drawdown went down over 50%. So yes, over long periods of time, stocks are a tremendous asset to own. Over long periods of time, they tend to beat inflation and compound at a higher rate than inflation. But in short periods of time, they can be incredibly volatile. So you need to know what your sort of get me out or your stomach acid point is, where it's like, I can't imagine my investments going down by more than this, or else I would freak out and I would need to get out. So the second one is really your willingness or your personal comfort level with taking risk. And then the third and final one is your need to take risk. So let's say that you're securely wealthy and you have more money than you're ever going to spend in your lifetime, and you don't have any other goals that you've attached that portfolio to in order for you to feel like you've led a successful and fulfilled life. I would make the argument that you have no need to take any risk. You could hold all of your assets in very conservative investments And if that made you feel comfortable, I think that that's a completely reasonable posture to take. Just because you can take more risk with your portfolio doesn't mean that you need to take more risk with your portfolio. So the 3 categories, just to recap: the ability to take risk, the willingness to take risk, and the need to take risk. Those are the 3 things you need to be analyzing when you're trying to make the asset allocation decision for your investment portfolio. I hope that this video has been helpful, and I hope that you're having a fantastic day. Take care.